please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
So good earnings growth, both of them very confident about growth, but yes, troubles of yesteryears will have to be moderated in the current year. We were speaking about farms, so let's straight away get to Manisha, who's waiting by with the early trends in the commodity space.
Thank you so much for that, Lata. When it comes to farms, we still are awaiting the MSP right now, but there's plenty happening in the global markets to keep us busy. And the crude oil prices, for one, are trading flat in the international markets. We did see 3.5% of gains. Asia did begin on a positive note, but since then, there has been some profit taking, and quite rightly so, because we have seen nearly 8% of gains in the crude oil prices in last 4 or 5 sessions itself. So that's exactly what we have seen for the Indian prices, 0.25% of a decline on the opening trades here. But there are much more fundamentals to watch out for, as we have been talking: the OPEC meeting reactions, the US and Iran sanctions, and of course the US weekly inventory draw. All of that would continue to support the crude oil prices as we go forth from here. The gold and silver, of course, has been under pressure. We've seen the US dollar continue to gain up. And even as it is a day when you have seen the safe havens perform better, like the Japanese yen or the Swiss franc, gold doesn't clearly feature into that one. We are trading at 2018 lows for the global markets. And even as the global markets are trading flat, and even as you have seen the rupee depreciate, clearly there is no buying interest that we are seeing for the Indian markets. And just to tell you, if you look at the spot markets, gold is being sold at a $7 to $10 discount here. So even if the international markets are trading at $12.60, Indian gold prices, you could get them at $12.50 an ounce. So that's the kind of discount, because there's no buying coming in into the physical market, is what we are seeing in this space. The base metal prices in the meanwhile have been quite volatile as well. Yesterday wasn't such a great day, but we have seen some bargain buying on the lower side. Now it is on the cheaper side, so you have seen some buying interest come in from Europe and China on the lower side for the metals, and that is the only sole reason that has led to that market actually turning into green.
Okay.
Buy strategies is what we have from Grow Value today. In the metal space, they're looking to buy copper for targets of 465. They also have a buy call come in for nickel prices. 1050 is what they're targeting.
Thank you very much, Manisha. Maturity of the Indian woman, right? Not buying physical gold. Well, we have to take a break, and we are coming back to track the most important event. It's 1 year since GST implementation. Mr. Harsh Mariwala, chairman of Marico, joins us.
Hi, welcome back. India's biggest reform, the GST, is set to complete 1 year of implementation, and the feedback through the year has been quite mixed. Let's get one industry veteran now. Harsh Mariwala, the chairman of Marico, joins in for a ground check of the realities. Mr. Mariwala, always great speaking with you. Thank you for joining us on CNBC TV 18. There was quite a dent in demand initially, post GST and demonetization coming together. Are we back to normalcy now?
I would say that initially there was some trade destocking in the month of June 17 after the GST was launched, or prior to GST being launched, and that had its own impact. But I think if you ask me today, are you back to normal, I would say that by and large, yes. I think all the sectors, at least definitely in FMCG sector, is back to normal. I think overall, I would say that it's a year where the GST has evolved and it's settling down, and I'm quite optimistic about the future of GST and the likely beneficial impact of GST on the Indian economy.
Oh, of course, the long-term impact is what we're waiting for. Mr. Mariwala, thanks much for joining us. But are your,
Yes.
managers complaining to you that there is increased staff cost, that there is increased uncertainty on invoice matching, the GSTR2, GSTR3 filing coming in, e-way bill? So are they complaining to you that this year margins could be under pressure because working capital is blocked, or there is uncertainty on these grounds?
The short answer is no. But let me give you a little bit more detail, if I can, in terms of how do I see the evolution of GST. I think you must understand that it has taken 10 years prior to the launch of GST in terms of the idea to launch GST and the actual date of implementation. And there was a deadline to launch because of the parliamentary, it had to be launched by September 17. So speed, agility was very important. And there are so many multiple stakeholders in the GST journey, whether it's the center, the states, different political parties, the trade, industry, exports, then the consumer, likely impact of inflation, political affiliations. So the finance minister had a very difficult job to arrive at a consensus, looking at all the stakeholders. And I must say that they were able to move within that time period. So speed, agility was important, and I think one has to view the GST journey in that context. And a lot of people are saying that there should be only one rate, or I think you have to see that the India is quite complex, and I think that whatever the finance minister did at that time was the best he could have done. But he has tried to resolve, not only the finance minister, but the whole finance
team,
GST state councils, GST council, as well as all the support staff. So whether it's the rates, the number of rates, classification, IT support, form, refunds, anti-profiteering fears, compliances, I think on each of them there has been a positive movement from the time GST was launched. And to me, I'm seeing that as a very, very strong positive.
So now that year
So it
one
has evolved
is,
over a period of time.
Sure.
The government has been very open.
Sure. No, sir, now
Yes.
that year one is out of the way
Yeah,
and the
let me
initial
finish.
hiccups are
I think
out
the
of the way.
government has been very responsive.
Yeah, sure, sir. Go ahead.
Sure.
Yes. Yeah, go ahead, yeah.
No, so what is year
go ahead,
two
go ahead.
looking like in terms of, I mean, growth for the
No.
industry?
So I would say that things are almost back to normal. So a lot will depend on the growth in the economy and how the economy fares. So the negative impact of GST is gone now. We had to go through that learning curve. And we are looking at optimism, but in terms of future, I would say that depending on how I believe that the collections will increase, the GST tax collections, the evasion will come down. The e-way bill has gone off quite smoothly, I would say.
Yeah.
Government can, ideally speaking, if they can simplify still all the form formats, it will lead to better compliances. And maybe in some new sectors like petroleum, real estate can come under the ambit of GST. So all in all, I am looking at very positively in terms of, and they may condense some of the slabs between 2018, they may come to a 15 or 16% rate. So I think there is some work to be done, but I'm quite optimistic that it will get done in the next 1 year.
Okay, so a final question to you. You know, we got two extreme views in terms of how the small guy, the SME and the MSME have been absorbed into the system. One view is that it's only the bigger companies who could negotiate this,
Yes.
and therefore they took over the market share of the unbranded guys. The other view was that a lot of the raw material is supplied by the SME and the MSME, and a lot of large companies have handheld the SME into the formal sector. What's your experience? Has more of MSME come into the formal sector,
Yes.
or has the formal sector grabbed market share from informal?
No, I think it depends on the relationship. For example, in our FMCG companies, you know, we deal with SMEs in terms of our distributors, CMF agents. They are our partners. So we have to hold their hands, you know.
Okay.
When it comes to some SME who's your competitor, then you may grab that opportunity and grab higher market share. So I think a lot depends on with whom you're dealing with.
Okay.
And I think different people will get different impact. But I think now the SMEs also have learned to live with GST and the complexity, and you know their ability to now file returns and all has improved. So overall, I think in going forward, unless you are doing tax evasion, I think your ability to cope up with the other larger sectors will improve.
Okay. Out of time, sir. We will have to leave it at that. Thank you very much for joining us. So that's a green tick or a thumbs up coming from Mr. Mariwala after 1 year of GST. We leave the markets a little bit in the red, but a goodish bit of recovery from the early morning lows. Wrap up on Bazaar, trading ideas on Chartbusters.